Yeah, I mean, it's like the Punch and Judy show at the moment, isn't it? And we're only seeing part of the discussions that I think are going on behind the scenes. I mean, that sort of U-turn last night with Putin, I mean, you can see there's all sorts of things being negotiated, I think, that we're not even getting sight of. We just see the sort of fallout from it. I think the big thing, though, is when it goes from, it's now hitting Wall Street, and it's when it sort of spills over onto Main Street, which we haven't really seen. And of course, Trump's approval rating with his core sort of voters has never been higher. So, you know, this rhetoric, this sort of patriotism that he's pushing is really popular with his core electorate. But I think that could change very quickly if we start to see sustained weakness in the stock market, and then that's spilling over into the economy.
Well, to your point, the ripple effects are everywhere. It was in the durable goods, wasn't it? And some of the purchasing actions by Americans trying to get ahead of the tariffs, making those goods purchases. And obviously Wall Street has reacted too. The point I wanted to ask you was whether just this repositioning that we've seen to reweight to Europe, and let's face it, Europe has been an element of a safe harbour, but will it be as we get through this week? Is it going to be everything gets tossed out because it's risk off? And that seems to me, if you look at the Japanese stock market, a real threat.
Yeah, I mean, there's been this big rotation. Obviously, the market, the US market particularly, was really strong into the year end. So I think that's why I have to be quite careful with year-to-date comparisons. And then this has coincided at a time where you've seen a bit of consolidation in tech, which I don't think is necessarily related to some of the tariff talk as well. But again, I mean, the defence, sort of the rise in defence stocks in Europe looks to be massively overdone. If you take someone like BAE, for example, half of their revenue comes from US military spending. So that can't, I mean, net, that can't be positive for them if okay, they get some benefit from Europe, but that's going to be quite latent in terms of the pickup. But if Trump is pushing this onshoring stuff, he's certainly going to do that in defence spend. So some of the stuff that's happening in the price action we're seeing just doesn't make any sense when you look at the fundamentals.
I want to challenge you on that thought, on the outlook for European equities here, because yes, I understand the case you're making for BAE Systems, but for other European defense stocks, that's not necessarily the case. We are seeing national governments putting a lot of money into defense. On top of that, if we just take a broader look at the European stock 600, we are up almost 7% on the quarter. So I'm wondering whether the positivity for European equities is here to stay, broadly speaking, rather than just thinking about defense.
Yeah, I mean, I think, so defence, I mean, it's quite nuanced, isn't it? But at the moment, they seem to be trading in a pack. So I think people are trading this as a sort of theme rather than being fundamentally based on each company. But yeah, look, I think we saw the purchasing manager index data in China overnight as well. Is this a sign that there's a bit of a recovery? Is it just people bringing forward sort of capex in advance of the tariffs? The reality is we haven't seen the real impact of tariffs yet, and you know, what are we going to get, as you say, on the second with this Independence Day as well. So again, we have to see what's actually going to be the real impact, which is quite hard to assess at the moment.